We at A.T. Kearney's Global Business Policy Council see a mixed picture in the global economy right now. The IMF forecasts that global growth will be 3.4% this year and will average 3.8% over the next 5 years. While these growth rates are respectable, the IMF has warned that they may downgrade them soon, and they mask important variations between key markets. On the one hand, the economic prospects of the developed markets are improving, as shown by a return to solid growth in the United States, improvements in Europe, and a slowly stabilizing Japan. On the other hand, many emerging markets are experiencing a growth slowdown, most notably in China, as well as recessions in Brazil and Russia. As we see in the headlines nearly every day, downside risks to the global economic outlook exist in many corners, from U.S. interest rate hikes creating financial instability in emerging markets, to global terrorism disrupting business operations and dampening consumer confidence, and from the possibilities of a Brexit to an implosion of China's real estate market. But we also see upside risks in the global economy. After several years of lackluster performance, we at the GBPC asked what developments could really reignite global growth. We identified our top 5 opportunities that would allow the global economy to finally achieve escape velocity. The first is the normalization of monetary policy in developed markets. This would signify a return to growth in these markets, and it would also reduce the uncertainty associated with years of unconventional monetary policy. The second is the successful rebalancing of the Chinese economy from investment and export-led growth to an economic model more focused on domestic consumption and the services sector. This transition would not only ensure long-term economic stability in China, but would also boost global demand for consumer goods and services. The third is technology taking off exponentially. Technology has long been a driver of economic growth, increased prosperity, and higher productivity, and we see enormous opportunities in the continued spread of mobile technology and the Internet of Things. The fourth is the acceleration of the Sino-American Economic Partnership. The US and China already trade and invest a lot in each other's economies, but further growth-enhancing economic integration is often held back by geopolitical issues. And finally, the fifth opportunity we see is Sub-Saharan Africa joining the global value chain. Sub-Saharan Africa is already among the best performing regions in terms of economic growth, and it will be the primary source of global population growth in the coming decades. If African countries could address their infrastructure and governance challenges and fully integrate with the global economy, the upside would be huge. Each of these 5 developments is a separate and distinct opportunity for the global economy. If some or all of them begin to manifest themselves in the coming years, we expect global growth to finally be able to achieve escape velocity.